Hello and welcome to May 3rd. Alpha's Capri at 60%. Let's go look at the chart. It's right there. There it is, 60% for Capri. What a horse race. Last week was Capri taking the lead, then dropping back. And then T took the lead and dropped back. Now CVS comes in from the backfield and is holding on to second place. And so let's go talk about Capri. So here's Capri. This is our stop here because we're still short of our close above our third ratio. But also note that this is an August, and August expirations, which means therefore August 20th to July 20th, June 20th. So if this trade is not exit by June 20th, we will then go to dipper low, which will be right in here. But we anticipate we're going to cross the third ratio and get that dipper low anyhow for Capri. And Capri is holding on to a nice little profit of $330 against $443.31. So if we can get just a little over $340 or $350, we can get this baby under $4,000 on the ode. So that is the story on Capri. Reminder that this is stochastic strategy. That is that the strategy is stochastics is coming from a low zone back in here, like right in here, with a compliance with an agreement with RSI and MACD histogram, and then we look for a high, the top of the body or the top of the high, and we look for a dipper low as our stop zone, and then we let it run, just let it go. So that's a review of stochastic strategy for this the strategy going on. The Elvis twist that we did this week was we added a divergence, a weekly divergence. And what that means is that we have to do is go back in time. Let me go back to that again. We have to go back in time. We have to go back in time, let's say 3 months. Yes, actually we only need 1 month. So we got 1 month daily, and we do want 3 months, but we want it in the weekly. There it is, week, and then we hit OK. What we're looking for is right there. This is what they call divergence. You see that the histogram, the stochastics is rising. See, it's rising here. I mean, not the price is rising, stochastics is dropping, and then price reverses. So we're looking for a convergence where stochastics in the histogram are equal, and that the price is in the up direction, indicating trend. That's what that's about. So we added one more element to the scanner, frame. Now we'll go back to our daily and get going with today's report. So here is today's report, and we are here at we're here at the close of 57.41, and we need to get to 57.95. So we are 34. Would that be right? 54. Be 54. So if we're 54 cents short of crossing the 57.95, the ATR is 221. So there is anticipation that we should be able to close above the third ratio tomorrow and then get to our dipper low here. This is an August expiration. Okay, that takes us now to CVS, who's taken over second place. And in CVS, at CVS, we are still short of our third ratios here, which is 80, and we closed at 77.69, so we are 331 away on an ATR of 118. So that's we're about 2 days out from crossing that close that third ratio, and then move it here. Now these are August expirations. Exit rule number 5. If you are 60 days or less than to date of expiration, start looking for an exit. Have already an exit rule in place. Our exit rule is we start using dipper low when we get to less than 60 days. When we get less than 30 days, we go to last bar low, get out of the trade, hold on to what profit we're in. Remember the rule of engagement. Number one, protect capital. Rule number two, protect profit. Rule number three, exits do not retreat. Rule number four, no, rule number three is take profit. Rule number four, exits don't retreat. And number five is rinse and repeat. Now, so that is that for CBS. Going on to T. And where is T, which is for AT&T? And oh, there's the rules. I just went right through it. There are the rules right there. And zoom in a little closer. So you can see we got our close above the third ratio today. We moved to the dipper low here. We are now running here in the close of the third ratio. Third ratio reward, close, rule number two. Close is greater than the third ratio, dipper low, right there. That's our exit rules. Rules of engagement are the others that I mentioned earlier. These are our exit rules. What are we going to do when price does this? We do that. Okay, that takes us now to RTX. I'm rushing a little bit because I want to get to the nemesis of the week. And here at Raytheon, we are also a little short. We closed today at 84.14 and we need 84.19, 1 nickel. Stick to the rules. If you start fidgeting on the rules, you start tweaking it. Oh, I'll do it for this one, but I won't do it for the next trade. The next thing is you're going to do it all the time. And then you're going to lose your discipline, and the discipline will erode your confidence and your consistency. So do not change rules. Okay, coming up to 7 minutes on the report. Coming to ATV. Now ATV is good because ATV is a representation for the downside. We are been talking about this downside for the last several months. It hasn't arrived yet, but there's little cracks in the market. We're at all-time highs and stuff like that. So now this ATV is in August also. So that means that come June 20th, we'll be going to dipper low. But I failed to mention on T, we are already in dipper low because June is less than 60 days away. So that rule is already initiated for the dipper low for AT&T. Then that will take us now to IAU, which is the gold stocks, and there we are. Now, this is where we're going to be looking at. This expiration is in July, right there. We are 30 days, 60 days out is May 20th. So all these July positions, IAU, which is currently we're looking at now, Walgreen coming up along with it. These two are July. So what's going to happen is that this May 16th, 60 days out, we're going to go to dipper low or hipper high according to the direction, no matter what. So that is the conclusion of the positive territories. Let's go on to the nemesis of the week. The nemesis of the week this week is 1,000 Touchstone Stands Capital. Their portfolio is called PTSG right there, PTSGX. And notice that this has a 18%. That's an 18%. That's an 18%. Right there, you have there's an 18% per average 10-year, and it's 6.84 for year to date. So we are beating the portfolio manager. We're at 22.2. The SPY came in at 12.6 today, and we are ahead of both benchmarks in the field of trading. And with that said, we'll conclude today's report for Losers Become Winners May 3rd, Capri at 60%. I thank you. Bye-bye.